But let's talk about Cello World itself. The promoters will be selling the stake. The IPO is open till November 1st. Pradeep Rathod, who's the chairman and managing director of the company, joins us now. Pradeep, thank you so much for joining in and welcome to the stock markets. Albeit you do have a listed player in the name of Wimplast on the bourses already. Just wanted a couple of thoughts on two things. One is your revenue. It's grown at a CAGR of over 30% over the last two years rather. Does that sustain going forward? And at peak utilization, what could your revenues look like?
At peak utilization, the revenue can grow for next 2 years at the similar level what we've grown in the last 2-3 years. So our 30%. Utilization in our different verticals is different, but we are approximately at 75% plus utilization.
Okay. All right. Hi, sir. Good morning. Nigel on this side. So you're saying you can grow at a similar clip. Last year, I think you did roughly around 1,800 crores of, of revenues. So you can comfortably go to around what? Around 2,600 crores without any further capex. Is that correct?
No, one capex will definitely come. What we are putting a glassware plant in Rajasthan, and one we have already completed. So putting that two together, I think so till 2,600 crores plus, we will not have much major capex after this.
Already outlined, I think, that capex that you're talking about. You've already said that you're going to be doing that. So we got that. 2,600 crores odd could be on the cards once that gets complete. In terms of peak revenue potential, we'll see how much you can do. One query I had with regard to the royalty. Earlier there was some royalty that was being paid to the promoter entity. As of now, there's no royalty. But is there a plan of reintroducing some royalty in the time to come?
Royalty perpetually from now onwards. It was only for a year when we had the PE investor in. And post that, we have waived off this royalty for perpetually.
Okay. So royalty is waived off perpetually. I just wanted to know that domestic, which accounted for just about 4% of your revenues a couple of years ago, that has doubled, more than doubled to now about 10% of your revenues. How much will your overall revenue mix comprise of domestic business, say, in the next couple of years when you reach the peak revenue of, say, 2,600 crores? And what is your current market share across the three verticals that you operate in right now?
So our export is around 8%, and 92% of our revenues are from local. Our market share within all the different segments are like in consumer wear, which is would be around 15 to 16%. Our stationery is a small segment which is started 3 years back, so we should be at a revenue of around 6 to 8%. Molded furniture is a very scattered category where our revenues are not in even double digit, and unorganized sector is much bigger over there.
Okay.
Right. Just beg your pardon, sir. The domestic, I believe, is 90% and exports is 10%. So just wanted your thoughts on how much will exports be as a percentage of your sales going forward?
Export would be around in the same range because some of our categories we did not have capacity, so we did not go much in exports in that categories. We will concentrate on that in future, but it would be in the range of 10 to 12%, not going, because domestic also is growing at a very good, healthy rate.
Okay. Okay. All right. Mr. Pradeep, two-part question. You have told us about, the geographic breakup. Online sales is around 8%, right? Where does that number, where does that number move to?
So this is on the consolidated basis of our sales. So two of our categories, writing instruments and molded furniture, is not part of, doesn't sell much on online. One because of the volume and the other because of the price point. So our consumer wear, which is 65%, on that if you see it is around 11 to 12%, and which I think so over the next 2-3 years we would like to achieve around 14 to 15% of revenue coming from online.
Okay, all right. Also, you have delivered positive cash flows for the last many years, which is very good, and the stock market lacks that very much. But now, post getting listed, the shareholders will also be interested whether or not you have a dividend policy in place.
So we have a listed entity, as you told earlier. We have a dividend paying company from last 25 years. And we have made a policy by which we give the dividend. We do not sometimes give higher and lower. We have made whatever the earnings of the year, 20% will go as dividend in that company, and which we have been doing from 25 years. Is a dividend paying company. So similar would be something over here.
All right. You know, I look at your margin profile across verticals. Houseware, it's around 20-25 odd percent. Writing instruments is 22 to 23 odd percent. Furniture is around 15-16%. Just wanted your thoughts on what your ideal revenue mix will look like across these verticals, and as a result of which, what could your blended margins trend at?
So the mix would be around the same line. I don't think so, because all our major two revenues will grow from our consumer wear and writing instruments. Molded furniture, because it is a lot dependent upon the pricing of the raw material. So when the raw material goes down, the revenues do not look very high. And we are also expecting to grow around 8 to 10% in that segment. The remaining two segments are growing much faster than this. So our revenue mix would be almost same, 65% around odd in the consumer wear, and writing instruments would be at around 16 to 18%. It may go, and molded furniture will remain over there at 16-18%.
And margins would be what?
So margin would be same, similar ground. We always have believed to have a healthy growth and healthy margin growth also. So historically in 30 years, Cello has always grown at a good bottom line, and that's the philosophy of the way we want to do our business in the future also.
Okay, all right. Mr. Pradeep, we appreciate you joining in here on CNBC-TV18 and on Chartbusters and giving us further clarity with regard to your issue. We wish you all the best with regard to your IPO, and on listing, we re-invite you to come back on the channel, and in fact then we could get closer to some targeted guidance numbers. But we appreciate you taking all our queries today.